Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Morning Forex Report. Today's date is the last month of January, January 31, 2023. We're off to a good start in the U.S. stock market despite the declines yesterday, which saw the NASDAQ index fall over close to 2% on the day. But we are still up fairly nicely on the month, so that's good news for that market. We're seeing today the employment cost index come in less than expectations. They're expecting 1.1%, came in at 1%. That's good, but the bad is that the year-on-year number is still relatively elevated. Big debate coming into the Fed decision on where rates should go, what they should do. And the markets are at juxtaposition in relation to the Fed, expecting that the Fed is going to overdo it, that they're going to lead to a recession, and that rates will come down. Rates are already down, well off the Fed target levels that the Fed expects. So with all that said, let's get into the technicals that are driving the Forex market. We'll start by taking a look at the euro versus US dollar. On the hourly chart, here we are seeing a decline, a rise in the euro versus US dollar, a decline in the dollar as a result of that employment cost data. Earlier today, we did see the market break below what I had earmarked as a swing area through here. This area was defined by different lows and different highs. You can see a floor right through here and a ceiling right through here. And the market fell below that level after holding it yesterday, tried to hold it here today and fell below that level, and then went down to another swing area. This was in the old swing area, if I can use area a number of times in the same sentence. This yellow area with all these arrows right through here came down, found support near the 108 level, nice round number as well, and the market started to rotate back to the upside, and the better than expected employment cost data took the price back up toward our 100 and 200 hour moving averages. The green line is a 200 hour moving average, the blue line is a 100 hour moving average, and this is the other swing area from back here where the market was in this period right through here. So we have two kind of red boxes through here where the market was up and down, and then we moved a little bit higher and went up and down, including both of those areas, and now we broke below, but back into the red box right here. What do you do? Get above the 100 and 200 hour moving averages, more bullish. Stay up in this red area, or this red box right here keeps the buyers in play. Move outside the red box, and we rotate down to the other red box swing areas. Not much else you can say. Lots of up and down price action in the euro versus US dollar. We just got to deal with it. Try to deal with the trade off the extremes. And if we break through the extremes, get out and look for the next target level and see what happens at that level. That's how I would trade the euro versus US dollar. Let's take a look at the dollar versus yen, see if there's anything better from that charting perspective. And similar to what we're seeing in the euro versus US dollar, there is some a swing area or up and down swing area through here where we have a nice little ceiling being established around the 130.60 level. We fell short of that yesterday after coming up to it here and finding sellers. The price moved back down to the 100 and 200 hour moving average, which is converged near the 129.94 level, and a little below that at 129, looks like 82 or something like that. So that's where the 100 and 200 hour moving averages are. And if we move below those levels, that would tip the bias more to the downside. This is the barometer for bullish above and bearish below. Also corresponds roughly with this trend, well, not roughly, but pretty darn well on line with this trend line that has this high and this high and this high, and I'll call it this high as well. And we came down and tested the underside of the trend line here, and again the underside of the trend line right through here. So lots of reasons the 100 hour moving average and the underside of the trend line in play here, along with the 200 hour moving average. So this is going to be our support right in the short term. If the price can hold that level, could see a rotation back to the upside. If it breaks below that level, then we could head down to this other trend line here, which has a number of different levels as well, including here and here. And in trading yesterday, the market bounced right off of that trend line. So this area right near the 50% retracement, 129.33, would be a target for the dollar versus yen if we tilt back to the downside below the 100 and 200 hour moving averages. Let's take a look at the sterling versus US dollar, and similar to what we saw in the euro and the dollar versus yen, we do have the 100 and 200 hour moving averages in play. In this case, we fell below those moving averages in trading yesterday, and we saw the market move down to this swing area here where a number of different swing lows and highs through here where the market found support against that level, rotated back up to the 100 and 200 hour moving average. And what did we do? We found sellers against the 100 and 200 hour moving average, which is kept the sellers in control, and they were happy about that. And then we fell back below the trend line right through here and rotated to the downside. As you can see, we are seeing a rotation back to the upside after the better than expected employment cost data, weakening the dollar, and seeing a rotation back to the upside. This area right through here, I wish I had it in yellow, but if we had a swing high right here, then we broke above it and came down and had swing lows through here. We did break, it got a little messy through here, but you can see the pattern here. We have a high, come back down to a swing area, break above, and then come back down toward that area. So, this area right here between the 123 and 123.13 level is going to be support now. Like the other currency pairs, we need to get back above the 100 and 200 hour moving average to increase the bullish bias in that currency pair. Final pair I want to take a look at this morning is the Aussie versus US dollar. Why? Because we're rotating back up toward the 200 hour moving average. In trading yesterday, we fell below the 100 hour moving average. That's a blue line in this chart after consolidating up here, then they're near the highs. That tilted the bias back to the downside. And in trading here today, we rotated down toward the 200 hour moving average, traded above and below it in the late Asian, early European session, then rotated to the downside to this swing area between the 0.6974 level and 0.69843 area, defined by these swing levels through here, where the market really had a bunch of ceilings here. We had a failed break, couple failed breaks, and then reestablish some support through here before rotating to the downside, coming back to the upside, trying to reestablish support. Anyway, this area right around the 69.74 to 84 level did hold support, moved back above the 50% retracement on the most recent move in the end, moving back toward the 200 hour moving average and the 38.2% retracement of this move to the upside. That level comes in at this level at 703.88, along with the 200 hour moving average is going to be a key level barometer for the bulls get above it or the bears stay below it. So there you have it. A look at some of the major currency pairs. Again, the U.S. stock market, we'll see the Dow up about 82 points. The S&P is up around 12 points. In the U.S. yield sector, the 5-year yield is down around 7 basis points. The 10-year yield is down about 5.2 basis points. So we are seeing lower yields leading to a lower dollar, and that's what the charts are saying as well. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.